Hello and welcome to SKANS eCampus. SKANS eCampus is a gold-approved learning partner of ACCA. On this channel, we bring you demo videos of different courses available at SKANS eCampus. So don't forget to subscribe to our channel to get notifications of additional videos and hit the like button.
This video covers a very important topic which is always going to be there as a major portion in question number 1, which is basically the case study, so audit planning. You should be very comfortable with what audit strategy is and what an audit plan is and the additional considerations in initial audit engagements, and there'll always be a scenario-based question on risk assessment in question number 1 in the advanced auditor's exam. Some common requirements from the past exams: evaluate the business risks, identify and explain the audit risks, perform preliminary analytical procedures and evaluate audit risk. So the difference between the second and third one is there are going to be additional marks and additional financial information to perform analytical procedures. And the last one, which hasn't been tested very frequently, but it's very, very important, I recommend any additional procedures that should be requested regarding the risks that you've identified. Now, for this, you're going to start off with understanding the reading techniques. It is going to be about 4 pages of the case study. Please make sure you make notes or annotate while you're reading the case study. Just going to put up an example now. So this is something I've done for one of the questions that I was reading each time. I was calculating the percentage changes. I was underlining the keywords, writing down names of the standards when I was reading them in the first time. Continued again for this, because there was some complicated wording and calculations involved. I did a bit of flow charting and I made sure I identified some of the points and linked them to my knowledge that I had when I was reading each time. Once you've done your annotation, you need to be aware of the answering techniques. For business risk, it's normally going to be 2 marks per risk. You get this 2 mark per risk by starting off with identification from the scenario, which is going to be half a mark, and then explaining the problem it's going to cause for the management. So you can't simply say a key raw material is imported, that's a 0 mark, until you explain the possible risks that this could cause for the management in the future. I've done a small extract on your screen, so picked up the information from the case to say they offer a luxury product aimed at an exclusive market, and then went on to explain the business risk. For risk of material misstatement, these are very technique-based answers, lots of easy marks here. You start off with identifying the risk from the scenario. If possible, comment on material, making sure you don't just do the percentage but do a conclusion as well. So if you simply write this is 7% of PBT, it's a 0, unless you give a conclusion to say, therefore, it is material. You then talk about the relevant accounting treatment for that particular risk. Please don't copy paste the entire accounting standard, just related to that particular risk. And then explain the risk. So the risk is that the accounting treatment I mentioned above has not been followed, and therefore you'll have to specifically mention which area of the financial statements is under or overstated. It does not necessarily have to be an amount. It could be a disclosure which is inadequate or missing as well. As an example, I've just put up the answers. So I've identified the risk to say the brand is recognized as an intangible asset at cost. I calculated materiality. It's 7.4% and therefore material. I spoke about the relevant accounting treatment only. So I don't need to talk about the criteria because this is not internally generated. You get 0 marks for that. I went on to talk about amortization. Then I mentioned the risk that non-amortization is not acceptable, and then I went on to mention in the last area that the asset is going to be overstated and expenses understated. So this is how I get about 3.5 marks from your screen right now. For risk of material misstatement with analytical procedures, in addition to what you've done just now, there are going to be additional marks. I would recommend that you start off with calculating trends. So this is basically percentage change. Please understand there are no marks for saying sales have gone up by 10% unless you comment on it. So you have to say the risks or explain the risks associated with this change in sales. So some common ones, you compare changes in sales with changes in cost of sales or with operating expenses, change in non-current liability, links to changes in finance cost, etc. You then, in the second step, calculate and comment on ratios. These are the common ratios that you can calculate. Make sure you do your calculations for both years, otherwise there's no point in doing the working, and comment on it. So if you simply say receivable days have gone up from 195 to 205, you get a 0 mark. You have to, so there are no marks for calculation at all. You have to explain if the days have gone up, you're worried about them being irrecoverable and therefore receivables are overstated. You don't get marks for ratio or trend calculation unless you link them to the risk. As a brief example, I've just done some answers from one of the past exams. The portion that you see in green is my comment. So the simple 19%, 25.6% gets me no mark until I start commenting or evaluating that relationship. In the second paragraph, remember, I'm worried about operating costs being overstated or sales being understated. Very good questions for you to attempt. There are 3 questions, 3 different types of questions, one with business risk, one with just audit risk, and the third one with audit risk with analytical procedures. You can now attempt these questions to see if you've understood the technique.
If you like this video, visit our website www.skansecampus.com to purchase the complete course at affordable prices. Register today at no cost and access our free 10-day trial.